Okay, I think we are up and running. Okay, so yeah, my name is Eric. A little bit about me. I have been day trading the Wall Street, New York Stock Exchange now for about 6 years. That's kind of how I got into the whole investment thing. I decided that day trading there was way too regulated, centralized banking and all that. The fees were excessive. The amount of money that you needed to maintain to get started in the game there was ridiculously high. Not to mention they did priority for people who do like market makers within that exchange. So if you weren't level 2, you weren't able to see the buy and sell orders going on. You literally stood no chance of making any profit whatsoever day trading. I was, however, able to get the stuff that I needed. But even then, when you day trade, you're mostly playing the penny stocks, and it gets ridiculous, especially when, what they call a money mover or a money maker comes through and just barrel rolls an entire stock. These are people that are throwing millions and millions and millions of dollars just into a buy and a sell at one time. And it will completely steamroll your order, and you have no chance in hell to make any purchase, any buys or any sells because of it. What's really interesting about crypto, though, is that you have access to the buy and sell orders. No matter what happens, your trade gets placed in the order book. So if one of these big guys, whales that they call them here, come in and do a buy or a sell, it will directly affect what you're trying to do. If you're trying to sell, you're going to get sold. If you're trying to buy, it's going to get bought up. So with that being said, I've now been crypto trading for about 7 months. I gave it, I think I started $750,000 or so is what I started with. And in the last 7 months, I have currently turned that into, between my day trading and using that money to purchase the bots, which I do, and everything that's going on, I am sitting about $225,000 I've made off of that less than $1,000 investment 7 months ago. So what I'd like to do is take a little bit of what I do and share it with you guys to help you understand what I'm looking at, how I'm doing this, and how you can make money kind of like I do. So if you can, go ahead and open up that link that I sent you earlier, the Trading View, and we're going to look at TRX. Now what I'm going to do is in Discord, I will copy and paste a few things for you guys so you can kind of understand what I'm looking at. Oh, someone left. Okay, so basically, why do you want to trade on crypto? For one, it's decentralized. It's a great system. 2, it's high volatility, and it's easy to make a lot of fast money on. As a day trader, which you want to get into, just so we're clear, we're not holding. People will get bags. A bag is basically when you've overextended yourself, you've purchased, and now you're held waiting for the price to come back up so you can either break even or try to make money on the long run. That's not what day trading is about. In crypto, we don't care about the US dollar. We don't care about anything other than Bitcoin or Ethereum, depends on whatever you're trading in. Okay? We deal in Satoshis. Basically, a Satoshi is a millionth of a Bitcoin, depending on the price of the US price or whatever, the dollar price of the Bitcoin depends on how much that one Satoshi is worth. I think it's 100 Satoshi right now is sitting about 3/4 of a penny. Okay, so with that said, as a day trader, we deal with percentages. We deal with getting in and getting out. That's all we care about. We don't care about the daily percentage on the whole, because we're not going to be part of that daily percentage on the whole. Okay, you might see a stock goes up and says, hey, look, it's 14% on the day. Well, that's good for the stock. That means that's been constantly going up. That's a great opportunity for you to make money. However, you are probably not going to be 14% at the end of the day. If you've done everything correctly, you could actually be a lot more than that. If you're learning charts, you're being conservative, you might make 7 or 8% on the day, which if you really think about this, 7 or 8% on $1,000 isn't that much money. But eventually, once you get, your money made up and you're doing 7 or 8% on, $5,000, $10,000, even $100,000, it starts to add up really, really quickly. So that 7% becomes a really great number. Something because of this drop that happened to me just this last weekend, I had 2 of my bots make almost 127% in one day. They literally pulled almost $15,000 a piece in one day, and that was because of the crash. And I'll talk to you guys a little bit how that worked after the session or whatever. Okay, so day trading. Basically, why you want to day trade. We want to get in on the lows. We want to sell at the highs. We want to understand what a chart looks like. We want to understand what drives the chart, what makes it function, why it fluctuates, what the volatility means, what volume means. So if you brought that chart up, the first thing that we are going to look at, if you go into the 5-minute mark on TRX BTC, which is what we're looking at now, you will notice that there, at the end of the chart, we've got a big, what we call a pump. Okay, you'll see that the volume itself was significantly higher during, and I'm marking in UTC -6 is what my trading view at the bottom right-hand corner is set to. So that if you set yours at that, you'll be able to hear what you'll see the times I'm talking about. So basically from about 12:30 to about 1800, you'll see that there's been a major source of activity, what's called volume on this stock, or in crypto sense, on this coin. Okay. What drives this volume? Well, there's a couple of different factors that can drive this volume. Media hype is one of the biggest ones. You've got places like Reddit, Twitter, those are the 2 biggest ones that can drive the hype. When you get someone like Justin Sun, who's, the big guy for Tron, constantly posting, these little tidbits here and there about, his coin, it's hype. Now, what's interesting about his hype, and this is why I wanted to use him, is because normally when a coin is hyped up by the owner, you get excited. The owner's like, holy crap, he's talking to us, he's being, he's communicating, he's being clear, he's telling us what's going on. People want to invest, That is awesome. People want to get into that coin. So you'll see the price of the coin start to go up. What's neat about his is that he deliberately has giant money movers that he has created that actually balance his coin out. So that's why you don't see the giant fluctuations with this coin, the pump and dumps. I don't think you'll ever see a big pump and dump hit on this coin because he has so much of it that he actually regulates it because he wants his coin to slowly gain value over time. He doesn't want hype alone to push the coin. A perfect example of what hype can do to a coin. Look, 2 weeks ago, what happened to Verge? Everyone was just absolutely buying into this coin based on one developer meeting a New Year's deadline to create a wallet. The wallet was created and everyone was waiting because they're like, okay, well, it's created, it's official, right? It's official. Well, he never actually put the word out that the wallet was officially done. So that stock absolutely plummeted. That is the type of hype that we thrive on as a day trader. Okay, so what we want is we want to see what we're looking for when it comes to social hype is we want to see how much the developers are talking with their group of people, with Reddit, with whatever form they're using, Telegram, whatever it is that they're using. We want to know what that hype is. Based on the value of that hype, based on what everyone is seeing, we'll get into the charts and we'll look and be like, holy crap, this is starting to go up. Well, why is it going up? Is it based on that hype? If it is, we start looking for entry points to get in. Okay, we look at the historical trend of the charts. We find a good buy-in point, and then we set our sell point. Okay, we're not looking for those 100% shots. Okay, we're looking for anything between 0.5%, upwards. The reason I say 0.5%, it's a good value, especially if you're using Binance, because you have to remember, if you own their the BNB coin or whatever it's called, BNC coin, whatever. If you own their coin, your fee is 1/20th of 1 penny per dollar. So it is a really low fee to buy and sell. However, it's still a fee that you have to account for when you're buying and selling. If you're not able to make enough off of the trade to cover the buy and the sell, you're going to lose money. So that's why we look at charts. That's why I use TradingView, because there's down the bottom right hand corner, there's this little percentage sign. You can quickly click that sign and it'll flash the percentages right there on your screen, which is absolutely amazing to have when you're looking at the 5-minute mark, because you can start looking at those candles. Those are the up and downs. If you should have candles selected automatically. The reason they call it a candle is because it's a thicker line and it's got like a little plume in the middle of it. Sometimes people call them a wisp, but what they call them, it's actually known as a candle. But anyways, you can see the percentage of that candle very quickly right there. This helps you figure out where your buy-in point is going to be. This helps you with your sell point. Like I said, we're only looking for anything 0.5% or above. If you look at the trend historically and you're like, holy crap, I got it at the ground floor. Yeah, sometimes you can ride it out longer than being in for a few minutes. I've rode out a coin, sometimes 10 minutes, sometimes a half hour, 45 minutes, because even though every once in a while there's a little bit of a dump on it, I am still well above my entry point. And as long as I stay above that entry point, knowing that all I want to do is make that 1%, 0.5%, I'll let it play. If I notice at where it's sitting at currently, there's starting to become a lot of volatility, I will get out. I will let the market do what it's doing for a few minutes. I will look at the candles. I will look at the resistance. I'll look at the support. We'll talk about that here in a minute. I will draw up some of the lines and see exactly what is happening. Now, on TradingView, there to the left side, you have a lot of different tools that you can use. My absolute favorite tool to use is the line tool. You're going to hear people talking about fib circles, the XABCD, which is a fib pattern. It's known as the Gretley pattern. And basically, it just takes percentages of where point A, B, C, D, etc. are to chart a bullish trend or a bearish trend. A bullish trend being that the market is going up. A bearish trend means that the market's coming down. So I like to use the line tool. And what I use the line tool specifically for is figuring out, based off the candles, based off the history, where the resistance lines are, where the projected growth should go, and where the support lines are, where it could dip to in case it starts to come back down. Based on that, we can go in or out of a coin, knowing where our money is going to sit. Does anyone have any questions right now up to that?
No, sir.
Okay, so everyone is
actually real quick.
Yes.
I pulled up your link showing the charts and all, but it doesn't have any of the tools on the link. So I was trying to look at TRX on my own.
Okay.
My own chart.
So you are probably looking at a white screen, right? I'm sorry.
That's right. It's all right.
Okay. There at the top, or I think it might be in the middle, there's a button that says chart.
Yeah.
It's called chart or it's called interactive chart.
There we go. Charge.
And then while you're doing that, I'm going to go ahead and draw some lines here. No screen sharing option here. You know what? There is a screen sharing option. Let me see if I can figure that out real quick. That is actually a great question. I click this. No. Okay. I don't know if you can share your screen with multiple people in Discord. I know you can do it with one person, unless somebody else knows how to do that. I don't think I've ever done that before. I'm not seeing any options for that. So no, I'm not seeing the options to do that for a group. So what I'm going to do is I was going to draw some of this stuff out, and then I'm just going to post it here in Discord so that you guys can follow along. So
okay, thank you.
So what we're going to do is, if you go ahead and you should be looking at TRX BTC. We are looking at the 5-minute ticker. So if at the top left-hand corner of your screen, if you click where it says 1 or whatever, take that down to 5. And then go ahead and zoom it so you've got, the last several hours on your screen. At the bottom right-hand corner, there's a button called Auto. If you click that, you can easily manipulate the screen and move it to wherever you want it to be. Okay, so what we're looking for right now what's this? Oh, someone joined. Okay, so what we're looking at right now is, if you zoom it out, you'll see right now that TRX in itself is on a bullish trend. You can see that around 0.9, it started an upward swing. You can see that at the bottom of there's a lot of volume. That volume has increased how much this coin is worth. Now, exactly why this volume has occurred, I couldn't tell you. I haven't found any real hype other than Justin said that there is something called Puppies, which I'm assuming is his little pet shop thing that he's working on. It's going to be out in English. So that's really all I can see. But what we're actually wanting to look at is we're wanting to look at the red candles and the green candles, and we're looking for those big swings. What we're looking for right now is an entry point to get in, and we're looking for a point to get out. So what I'm doing with my line tool right now is I'm actually drawing where I think the support lines are actually going to be and where the resistance lines are going to be, and I'll post that here in a minute. If you want to follow along with me, you can. I'll tell you where I'm putting my lines, and I'll explain why I'm putting my lines there so you can understand why. Let's see, I'm going to put one there, and then this is looking good. This is that percentage there. We're looking about right here. Okay. And I will go ahead and label these for you guys. This is resistance. And this is support. And we'll go ahead and print screen this. Make a little copy. Come on, where's my copy? Oh, wrong screen. Okay, so this is what I just created. Now, let's talk about the support line first. Why I went with the support line the way that I did. Okay, this is where basic charting comes involved. If you look around on that screen, if you look about the 1500 point onward, you'll see that there were multiple points in between here where the price has gone up and the price has gone down. This is what's called a support line. In order for the coin to start plummeting down, it's got to break that support line. And historically, if you look, you can kind of start to see a pattern evolve here. You can see how it went up, and then it came back down to that support line, went back up, broke that support line, plummeted a little bit, but then it came back up, and then as soon as it went back up a little bit, it came back down, it hit that same support line, and now it's going back up. Now, looking at the line on the top, that's called the resistance line. Basically, I'm doing the exact same thing with what I did with the support line, only it's opposite. I'm looking for peaks where that bullish trend is going to hit. So right now, what I'm looking at here, and this might take a couple of minutes depending on what this candle does that you're watching right now. I suspect right now that we will see be about 732 will be where the green will go. And that's all just basic chart reading off of the support line and the resistance line. Now, I've seen some stuff on our Facebook group. People are talking about, well, you can't really chart coins like you can stocks. I actually had to call shenanigans on that. You can, because if you really think about it, in its base level, chart reading is chart reading. Trends are trends. You know, yes, there's always going to be volatility. Yes, a major player could come in and just pump and dump it, but that's the chance that we take. We know it's going to happen. We're not really worried about that. Okay? That's just the chance that we take. The reason we draw these support lines and these resistance lines is because this is showing us where our entry point should be and our sell point should be. Okay? Now, I kind of overextended this just to show you guys what I'm talking about. For instance, right now, if I wanted to get into this coin, I would say that I would not purchase right now. I think we are going to see a couple other negative/red candles come in, and I think we could get a lower price closer to that support line before it jumps back up. Now, if we were playing this conservatively, we would wait and go in on 2 or 3 red candles. That is always, for me, the best time to go in. If I see a red candle form, I'm waiting. If I see a second red candle come, okay, well, let's look at the charts. How many red candles have hit each other, you know, on this chart at the same time? 1, 2, 3, you know, just depending on what that is. I know it's not perfect science, but trading like this isn't perfect science. Basically, you're just looking for a good general number to get in, and then you're doing the same thing with the green lines. Okay, well, how many lines does it look? How much volume is shot up? And then we set a point, you know, 0.5% or 1% or 2%, depending on how much volume is being created for that number. We get in, we get out, we increase our Bitcoin, and that's all we care about. Any questions?
Yeah, where are the titties?
I think those were on one of my other classes.
Is this being recorded so we can play it back later? Because it was breaking up pretty bad on me for a little while there.
Is my volume breaking up on you?
I'm not sure. It's getting real jittery. It's hard to say whether it's volume or just a shit connection on my end.
Okay. Yeah, I'm recording this. I'll be putting it on YouTube. So I'm sure it'll be boring as hell for you guys. Steady on my end. Sounds good. Okay, so someone says it sounds good on their end, so it's probably you, Rich. It's always you.
Okay, good. I know.
Always you.
Never mind that guy.
Damn it, Evan.
Here, I'll disconnect.
Well, I'm not on push to talk, so because people are always telling me that my push to talk always comes in and breaks up, so that's why I got my open mic for this session. Okay, so 80 questions right now on support lines and resistance lines. Great. Okay, so the next screen we're going to be looking at will be, I'm going to bring up my Binance screen here. I'm going to take a quick little snapshot, and we're going to compare it to the chart that we were just looking at. I'm going to go here. And we're going to copy this, We are going to paste this. Okay, next picture. If you're not on Binance, welcome to Binance. This is how horrible it looks. So what we're looking at here, what we actually care about on this screen, if you can make that picture bigger through Discord. I don't know if you can or not. That sucks. Okay, so basically what we're looking at here and what we care about is the support and the resistance to show you my lines in a number form. The stuff on the red at the top right, or pink, you know, whatever. For me, it's pink. I hate the fact that it's pink, but it's pink. This is called your resistance, basically. In order for a price to go up, these are the numbers that have to be eaten up. The green numbers are the people who are trying to sell. This is the support. Support is also known as liquidity. You may hear people talk about liquidity in a coin. Basically, it's how much coin is available to be purchased to support, i.e. why it's called support, the buyers. When there is not enough support for the buyers, they have to start buying from other places. Therefore, when they start buying, the price goes up. When there is plenty of sellers and not enough buyers, and those sellers need to get out, they're selling on their side and the price goes down. I know it sounds kind of ass backwards, but this is how it works. So if you're looking at the numbers themselves, okay, we're looking on the right hand side where it shows total BTC. On the red side, you'll see that sitting at the 712 Satoshi in the pink, you'll see that there's 4 Bitcoin. Below that a couple, there's 7 Bitcoin, 3 Bitcoin, 5 Bitcoin. This is what people are calling resistance lines, and sometimes you'll hear people say breaking resistance. Well, basically, in order to gain additional value in a coin, you have to constantly keep breaking these resistance lines. And depending on how much money or how many coins is sitting on each line is how much people have to purchase, or bots have to purchase, to increase the value of the coin, and vice versa when they're trying to sell out. The reason why this is an unregulated system is there are ways on Wall Street and in the financial world, people can regulate how much buy and sell happens at any given time. In crypto, you can't do that. That's why we are susceptible to massive pumps and massive dumps. Okay, so basically, the lines that I was showing you on the other chart, when you get the chance on your own, you can look at TradingView, you can look at your exchange platform, Binance, Polynex, whatever you're using, and then you can compare those lines. And the lines that you draw after you're visualizing where you think the support and the resistance lines are should match up to where those numbers are within your exchange, where those buy and sell orders are for your resistance and your support. This is a great way to understand how to get in and how to get out. For instance, if I was looking at this picture right now, I see that at $6.99 there's not much, $700 not much. There isn't a whole lot until you hit about $7.08. Well, what you can do in TradingView is you can see how much of a percentage from $6.99 to $7.08 is. And if there is more than, 1/4%, 0.5%, then it could be good for you to possibly get in. Like I said, we're only looking for 0.5% up to make money. You build small, you constantly build small, you get smarter with your purchases, you start to make more of an interest, more of a percent, and it becomes a snowball effect. We're looking for small, consistent growth upwardly. And once you start getting better at chart reading, you can actually understand how to do this exact same thing in a bearish environment. You know, there's always going to be sells, but then those sells are going to be spiking up on a bull run at some point. And if you understand how to read the market correctly, you can catch that positive spike up and make a couple of percent before it drops out. Any questions? Evan, did you say green is selling? Green are your sellers. They're the people waiting for their liquidity to be purchased. Yes. The red are the people who want, who are trying to stop you from going up. So in order for the price to go up, you have to purchase from them to get the price to go up. But the people who are wanting to sell are the green people. If more takers are purchased, the price goes up. If more makers are purchased or sold, the price goes down. Does that help clear that up a little bit? Maybe, kind of not. Alrighty then. Does anyone else have any other questions? Evan is typing. Ah, good point, Evan. Okay, so let's go ahead and talk now about patterns and why patterns are important when it comes to trading a coin. Let's go ahead and go back to our trade view. Let's go ahead and set our minutes to a 15-minute timer. And we're still on TRX. And then we want to zoom it out. We want to zoom it out, not so like everything looks shoved together, but let's go, let's say 5 days. If you can show 5 days, that should work. So I've got on my screen, I'm looking at from roughly the 12th being all the way at the, the trends all the way at the top to recent, just to the right of the screen. This is what's called historical charting. We are looking at the fluctuations in price. The reason the fluctuations in price on a daily value is important because it helps us give us an understanding where you could potentially buy in and sell. Sometimes when you are not as confident in trading, you say, hey, well, I want to be able to make a profit today, but I don't know if I can play these little profits. We can use the historical charts and say, hey, well, this is what's been going on for that day for the last couple of hours. If I understand this, we can look at the longer view of the picture and say, hey, if I set a buy order at this price, it should hit. And if that hits, then you can say, if I set a sell order at this price, it should hit. Now, what's interesting about this is it's a gutsier move, actually, when you do it that way. But if the coin itself has been stable enough for a couple of days, then it's usually a safer bet to go with. So again, it can be gutsier because of the volatility of the coin. You can never predict a pump and dump. Just like while you were just looking at Tron, you cannot predict that the price was going to jump up the way that it did, going from 476 Satoshi and hitting a high of 789 Satoshi. You can't predict that. Okay? What we care about is if you zoom it in. Let's zoom it in on. We'll use between the 16th and the 17th on the 15-minute marker. Zoom it in so you can see that spike in the middle. What we're looking at here, starting about on the 16th at 0300, we see consistent up and down movement. If you actually look from there through the 17th to 0600, you see a good wavy pattern. This is where you can zoom out, look at the trend, gives you a better understanding of what's going on with the market. You can, and for a new trader, it is extremely easy to get what I love to call walleye vision. Okay, for those who fish, they understand walleye have horrible eyesight and they can only focus on one thing at a time. If you are playing in the 1 minute marker, you can get walleye vision. It is absolutely imperative that you've moved back to the 5 minute, the 15 minute, and get your perspective back when trading, or else it will bite you in the ass. So looking at the 15-minute marker, like I said, this would help us understand that there are multiple times where we could get in at a really good low price because we can see where those candles where they dipped and then immediately came back up. And we're basically playing an hour at a time by doing this. There's a big dip, you know, at 462. It hit about 455, but then it jumped up, you know, to 518. Why do I have no audio? Oh. That's a good question, David. I can't help you with that right now. Let's finish this up. Try to fix it on your own. You can't hear me because you have no audio. Hold on, guys. But help you right now. I am recording this though, so you can catch it later. Okay, so if you guys want to, you know, talk to him, try to help him out, that's fine. But anyways, so what I was saying is there are ways where you can hit these dips and gains, and you can come out on a greater percentage, but it might take you a little bit longer to get there. Sometimes it's really mind if I jump down and have a listen. Come on, Scott. Oh, you're interrupting, you fool. Get down here. Okay, so yes, in a sense, this is day trading as well. This is playing the longer gains. The longer gains take a longer amount of time to perform. But yes, it is possible when you're doing this to pull 3 or 4% at a time. So don't be afraid to challenge yourself. Get on the 15-minute view. Don't look at the 5 minute, the 3 minute, the 1 minutes. Stay on the 15-minute view and attempt to play your dips and gains from there. Once you get confident and understand how these work, you will get an extremely better understanding of how the 5 minutes and the 1 minute dips and gains are profitable. Any questions? Great. Okay, so I want to go ahead and wrap this up. The last thing I want to go over with you guys is future projections. Using the 15-minute timer, go ahead and just zoom TRX all the way out till it doesn't zoom anymore. We're going to start seeing a bunch of just straight up white lines. And what we want to do is we want to look here at the end of it. Future projections are in themselves very unpredictable, but based on the history of what happened with the coin, we can project that there's going to be certain profits made at a certain point in time based on how it looks in the past. So if you have TRX zoomed all the way out, you'll see that on the 3rd, there was a giant spike. And if you look now on the 17th, there is, a giant spike. Now, what we can do, speculating, I mean, this is literally best guess, but what we can do is we can look at where these prices went. And hell, even right now, looking at TRX the way that it is, it's matching certain points that happen around the 10th. So this tells me that, again, we should start to see a future projection coming back, into a higher value for the currency. At one point, this currency was sitting, in the 1100s, the 1200s. Future projections, like I said, this is very basic, tells me that in the near future, this is going to be back in the 11 and 1200s. Exactly when, that's going to be based off of social hype, what the developers or whoever is what's called shilling the coin put out, how well the coin itself is guarded, and from that will determine, like I said, how much of the value is going to go up over time. If we notice that the coin itself, when we're zoomed out, on the 15-minute marker, if we notice that there was a hell of a dump, and then it continues to dump, and it continues to dump, something catastrophic has happened with that coin, and you have two options as a day trader. Get the hell out. Get your money. Leave the coin alone for a few days. Let it do whatever it's doing. There's a couple of different things it could be doing. Or you could go in, start weeding through the media, try to figure out exactly what's causing this, and then from there, use that information to your advantage to start making money. Again, the reason I picked Tron, this is a great example, is because we have a giant, right there on the 1st to the 3rd, we have an absolutely ginormous push, okay? At one point, what did we hit? It was like, I don't know, 2,000 Satoshi or so? We hit on Binance, 2,047 Satoshi at one point on Tron. Well, we know a couple of things. One, the coin is heavily supported. We know that the developer absolutely loves to communicate to a fault. I think he actually over communicates and it actually hurts his coin. But because of this, we know that the coin itself is a good coin. It's solid. Why is it solid? Well, do your research. Find out what's driving the coin. What's the coin about? Is the coin actively being used within the crypto or the technology? Make your own determinations. Do your due diligence. Do your research. Figure out if the coin is worth even working it. Okay? There are coins that are worth keeping. So even if you take what's called a bag, when you've overextended and you've pulled an Evan and bought at the top and you're still waiting for it to come back up. Poor Evan. We know that in the future, that price is going to get up there and you'll eventually break even or you'll even make a profit. There's coins out there like Stellar, for instance. I don't know a whole lot about that coin. I don't know if I necessarily trust the technology behind it. It's for you to make your own decision. Is it worth trading in? Okay. The next thing that the next piece of advice I would like to give you guys before we close is when you're starting your day, set a time to trade. Don't let people interrupt you. Don't let phone calls get in the way. Don't let kids get in the way. Don't let your life around you get in your way. Okay? If you can only trade for an hour, then make sure that you have a dedicated hour. If you've got an 8-hour period, then make sure that you have a dedicated 8-hour period. Don't let interruptions get in your way. Do not ever, ever, ever walk away from your coins if you are invested. This is 100% imperative. As a day trader, we don't care about holding. We care about getting in, getting our percentage, and getting out. Don't ever leave your coins on hold. You'll hear people in the group say, yeah, I'm going to leave it, overnight. I've set a sell order, a buy order, Okay, that's great and all, but at the same time, you can only do one at a time. If you set a buy order and it fills and you're sleeping, there is nothing stopping it from dumping that night and you're out on your ass. At the same time, if you're waiting to sell out, and you leave and you have that sell order set and it never sells because it's, again, dumping, you're flat out. There's nothing you can do about that. So don't ever walk away from your coins when you're actively trading. Okay, I am done. I hope this makes sense. I hope it helps you guys. Now, does anyone have any questions for me?
Yeah, I got a quick one. So at the end of the day, after you're done doing your day trading, do you convert the coin back to Bitcoin at the end? Is that how you, I guess, keep it safe? Is that the best way to phrase that?
That's a good question, actually. Depending on the exchange that you were using, a lot of people like to go back into Bitcoin. I have noticed that your big whales, people that have multi-million dollars invested that like to come through and pump and dump, they actually put their currency back into, if you're on Binance, back into the BNC coin or BNB coin. I think the reason they do that is, one, that coin is constantly 100% being actively used on millions of transactions a day, because that is the coin that is used to keep the fees paid for. So if you are done trading for the day, you can, if Bitcoin is going up, and we know that Bitcoin goes up and down, but when it goes up, it goes up, and when it goes down, it goes down. We understand that with Bitcoin, when it is going up, it's going to be going up for a couple of days. It's not going to just go up and then just drop on its ass. Okay, it doesn't just flat out drop. If you look at it historically, it never just flat out drops. There is always a trigger point. If you see that trigger point happening, get it out. Put it into something else, Put it into, the BNB coin, if you're on Binance. If you're on, KuCoin, I think they have their own coin. I'm not sure if BTC has their own, But if they do offer their own coin, a lot of times that would be a more stable investment to put your money in for overnight. Personally, I like to keep my money in Bitcoin unless I see a significant drop like what's happened today in the last couple of days. Then I'll move it into an altcoin like the BNB coin. What's nice about Binance, honestly, if you really needed to, is they offer the USDT coin, which supposedly, I don't think it's ever been confirmed, is 1-for-1 backed with the US dollar, but I can't tell you how Tether works. I don't ever use it, but if you want something that's the most stable on their exchange, it would be Tether.
And I got in a little late, so that screenshot that you sent, is that from Binance or is that from another?
That's from TradingView. The first one is from TradingView, where we were going over resistance lines and support lines. And the second screenshot was a Binance showing the buy orders and the sell orders, talking about how those resistance lines and the support lines should match up. So when you draw your lines, you can take where those lines you drew, look at the numbers that they're sitting on, and then those numbers should be able to match up fairly consistently with where there's heavy support or heavy resistance on the number side in Binance.
Gotcha. Okay, I'll go over the beginning of this too. I'm not going to make you repeat yourself over again. I appreciate it.
Yeah. Anyone else have any other questions?
Yeah, I have a question for you.
Sure.
Did you talk at all about confirmation candles and how to read those?
You talking about, oh, just going over candles and how to read the charts?
Yeah.
Yeah, we went over that.
Okay, I'll check it out. Thanks.
Okay. Anyone else? Going once. Going twice. Sold. All right. Thanks, guys, for coming out. I appreciate it. If this helps, and I hope it does, my links are up at the top. You know, feel free to donate towards my cause. I will be doing more classes in the future. My goal is to start doing more dedicated classes. I want to get into the technical aspects. And if you're interested, contact me. We can start talking about the exacts and what you're looking for. But there is a lot more about day trading than what I went over. Like I said, this is just the top overview, and I just kind of want to get your guys' feet wet. So again, thanks for coming out. You're welcome. May you rest. I probably just slaughtered that. And you guys have a wonderful day.
May the force be with you.